please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now back home on the Wall Street, it was a positive start to the week with all indices closing well in the green. The Nifty ended with gains of almost 1%, while the Sensex closed with gains of nearly around 300 points. The Nifty Bank as well ended with a gain of around 200 points odd. The mid-cap index, well, it followed the trend, closing up roughly around 150 points in yesterday's trading session. But plenty of cues stacked up for us this morning, and Anisha joins us to run us through all those market cues. Hey Anisha, good morning.
Good morning, Nigel. Well, yes, as you mentioned, the Nifty yesterday was able to reclaim the 10,700 mark on a closing basis, while heavyweights like Reliance, ITC as well as ICICI Bank ahead of its numbers supported the key indices. But it was the pharma that underperformed yesterday. Overall, the Bank Nifty as well as the mid-cap index performed in line, up around 0.7 to 0.8%. Even if you look at the fund flows picture, it was the second straight day when we saw a 4-digit buy number coming from the DIIs. So yesterday they bought around 1,037 crores in the cash market, while the FIIs sold around 635 crores. So remain a net institutional buy figure when it comes to the cash market. If you're looking for cues for today, well, the handover from the US market was in the green, because remember, the Dow gained around 94 points at their close. Even the S&P was up around 0.3%. But do remember that these indices closed well off the session's high, because Dow at one point of time was up around over 200 points in the green. And that because POTUS decided to tweet again. Now, President Donald Trump tweeted about the Iran nuclear deal. He was supposed to decide on it on May 12th, but yesterday he tweeted that he will come out with the decision today, that is Tuesday itself, 2 p.m. Eastern time. Now, before this happened, the crude was actually trading, as far as Brent is concerned, at $76 per barrel. Even the US crude was up around $71 per barrel. But post this tweet came in, the crude also declined a bit, as well as the key indices. So that is one important cue to watch out for today. As far as the domestic cues are concerned, well, ICICI Bank is really the stock to watch out for, given its weight in the Nifty as well as Bank Nifty. Now, the slippages yesterday came in at around 16,000 odd crores versus 4,000 crore last year. But remember, more than 75% of the slippages actually came in from the watch list, and that is what the analysts are taking heart from, because now they say that the NPA recognition in the coming year might be on the lower end. So that is one stock to watch out for. Remember, the ADR was up around 4% yesterday. Other than that, PM Modi continues his rallies in Karnataka. That is one thing to watch out for. Levels to watch out for the Nifty. The experts say it continues to be a stock-specific market. However, on the upside, we can see a level of 10,740 to 7,780. On the lower side, it can be 10,690 and 10,640, which can provide some sort of support. As far as the Asian screen are concerned, they were mostly in the green. Of course, the SGX Nifty suggested that we might start at the 10,750 mark, but let's see how we progress from there.
Okay, and Anisha, what about stocks?
Well, of course, top on mind is ICICI Bank. Apart from the numbers, the management said, rather Chandra Kochar said, that there was no discussion regarding the video call transaction, the board meet yesterday. There is one more board meet that is expected to happen today, but that is business as usual and regarding the usual business as far as ICICI Bank is concerned. So expect a green tick on that one. Technology stocks will be in focus because Cognizant came out with its numbers yesterday. Now, the Q1 numbers were in line with expectations, but the guidance has really disappointed, and that might put pressure on the technology stocks today. Other than that, OMCs will be in focus given the move in crude. PNB housing will be in focus because there is a 5% block that is expected on that counter today. Remember, the price is around 6.9% lower to the yesterday's closing price, so that might see a technical adjustment there. Tata Coffee will be in focus. The numbers were not good because the net profit is down about 86%. The margins have also depleted. The management says it was the lower production and unseasonal rains, etc., that really impacted numbers this time. Z-Learn, well, the profit is flat year on year, but the revenue has gone up by around 34%. Let's see how that one reacts today. Trident, it was a weak quarter again because revenue is down 7%, the profit down about 50%. Tube Investments, a bit of an unimpressive quarter. Of course, the profit was impacted because of one-time exceptional loss, but other than as well, the numbers don't look very impressive. Fortis Health, wherein they have told that UBS Capital has cut their stake by around 5.44%. Let's see how that one reacts. Tata Metallics, they say that there has been no production at the Kharagpur plant since yesterday because workers are not showing up. So that one might see a bit of rhetoric. Other than that, a couple of USFD approvals coming in for Loop and Unichem, a couple of decisions regarding fundraising for Muthoot Finance as well as ABFRL. Merck also has some open offer updates, and of course it's the results season, a lot of results lined up for today. So ABB India, Whirlpool, Jubilant FoodWorks are the few names that will be in focus.
Anisha, you're looking great in black today. Please go take some rest. That was, you went at a rampant pace out there. Thanks so much for joining in, giving us all the cues, all the stocks.
Straight to earnings now. We have ICICI Bank, which saw a 50% slump in its fourth quarter net profit when compared to the same quarter last fiscal. The bank's slippages also saw around a four-fold rise on a quarterly basis. Abhishek is here to decode the numbers for us. Abhishek, morning.
Good morning, Ekta. As you mentioned, slippages for the first time have come in 5-digit levels, that is above 10,000 crores. So apart from the fact that slippages came in at 15,737 crore, that compares to about 4,380 crore in the previous quarter, it's heartening to see that the balance sheet is cleaned up. Why do I say so? Because in the last 2 quarters, overall 18 to 20% slippages were coming in from the stress pool, which they had already mentioned, but this time 77% of the slippages have come in from the known stress, that is the watch list and the restructured accounts. So total stress in the balance sheet as per management now stands at about 13,365 crore, and that forms about 2.6% of the book. Overall, if you look at the watch list, now watch list has declined by 75% or about 14,000 crore rupees on a sequential basis. So a large part, that is about 11,700, 11,800 crore of the slippages have come in from the watch list, and the watch list now stands at about 0.9% of the book as compared to 3.8% of the book in the previous quarter. The bank had a gain of about 3,320 crore from the stake sale in ICICI Securities. They also had a healthy low growth. We were working with a number of 8 to 10%. It came in at 10.4%. The net interest margin improved sequentially by 10 basis points to 3.24%, and that is because the low cost deposit share was the highest ever for the bank at above 51%. So asset quality deteriorates as gross NPA increased by 17.4% in absolute value, and in percentage wise it increased by 102 basis points to 8.84%. Both the NII and the net profit is higher than what we were estimating. Brokerages are really positive on the results. They have said that valuation is cheap, balance sheet cleanup is a huge positive for them, but near-term ROE pressure could be seen. So target price across brokerages, that is Credit Suisse, Morgan Stanley, Nomura, DB, CLSA, etc., is in the range of anywhere between 350 to about 425 per share. Back to you.
Okay, all right. I think on that note, we can hear out what the management had to say at yesterday's press conference.
Gross NPA additions for the bank had actually declined during the first 3 quarters of fiscal 2018. However, during Q4 of 2018, the gross additions to NPA were elevated at 15,737 crores. The provision cover ratio on non-performing loans, including of course cumulative technical and prudential write-offs, improved to 60.5% compared to 53.6% last year.
We understand and we acknowledge what the board has said on its stance on the Videocon case, but given the fact that investigations externally are still on, in the interest of maintaining stability at the bank, has the board at any point discussed bringing in an interim CEO or laid out a succession plan in the event of a change in leadership?
I think the board has made its stand very clear, in the March 28th board meeting. And as far as the operations of the bank are concerned, you can see the stability, the enhancement in franchise and the results. Thank you.
Would you stay on till the end of your term in March 2019? Is that a given?
Well, I think today we are talking of Q4 results. We've never talked about any CEO's tenure in any results presentation.
Of India's oldest financial firms, the DSP Group is ending its decade-long partnership with the world's largest investment management firm, BlackRock. BlackRock has agreed to sell its 40% stake in DSP BlackRock joint venture to the DSP Group. Shireen Ban caught up with the chairman of the DSP Group, Hemendra Kothari, and began by asking him the rationale behind DSP buying out BlackRock's stake.
The reason very clearly and simply was DSP family comes 152 years of history, and I didn't want to, at my end, close the chapter. When I sold DSP investment management business to Merrill Lynch in 2006, I kept DSP fund management aside, and to see that DSP continues as a family firm in financial services business. So this was one of the major reasons. And second was, we believe that we in India has a fantastic scope. I'm very excited with the prospect of India and mutual fund business in India to grow at much different levels. So that was the reason. When both sides want majority, I think one side has to take a call that I don't want to sell, and that's what I took the call on that.
May I ask you if the offer was not compelling enough, or you were just not interested in selling majority, sir?
I was just not interested in selling. I think this has
so what is the
future great value creation fund management business is going to be.
Okay. What is the future now, sir? Would you look at a potential partner to replace BlackRock in future? What is the vision now going from here?
There is no idea of wanting another partner. BlackRock has been a good partner. Mr. Larry Fink and me are very good friends. We continue to remain friends for tomorrow also. I think so there was no reason for me to join hand with somebody else, and there is no thoughts in my mind.
Okay, well, interesting conversation there, but on to some key earnings now. Jubilant Food will be in focus on the back of its Q4 numbers. Mangalam is here with the street expectations.
Absolutely, Ekta. So the stock has been a stellar performer. So it has more than doubled over the last few months itself. And going into the results, it is definitely at a record high. So a couple of things we'll watch out for in Jubilant Foodworks numbers. The most important thing is the same-store sales growth. That is something we'll be watching out for. But while the revenue growth will not be as much, the thing that we'll watch out for is the EBITDA growth. That one's likely to grow by about 113%. So we'll watch out for the EBITDA, and the net profit optically is likely to grow by about 600 to 700%. But remember, the street is expecting a blowout set of numbers, primarily because fourth quarter of FY17 was sort of a kitchen sinking quarter for the company. So if you take a look at the profit trend as well out there, the fourth quarter the company posted profits of just about 6-7 crores. So that is likely to grow to about 52.5 crores in this quarter. So that is something we'll be watching out for. Apart from that, same-store sales growth, there is a wide range of estimates as far as same-store sales growth is concerned for Jubilant Foodwork. We have the likes of Kotak, which expect 24% same-store sales growth, and we have Jeffries as well as the others who expect sub-20, say 17, 18, 19%. So a median level would be 20%. Anything above 20% is something that the street will take with both hands, and anything below 20%, the street might not disregard it completely, given the sort of movement that the company has shown, the improvement that the company has shown. So we'll watch out for how this goes. And more importantly, the fourth quarter, what will work for company? The extension of their everyday value-added pizzas. That is something that the company will benefit from. The second thing is that they've extended their delivery times in Maharashtra to about 3 a.m. So that is something that will work for them. And reduction of losses by shutting Dunkin' Donut stores. That is something that will work for them as well. So pizza time it is.
All right, pizza time, Mangalam. I don't know about the numbers, but you're definitely going to be treating me to a pizza irrespective of what goes on with those numbers. But you told us about a blowout quarter for, for Jubilant Food. What about Godrej Consumer? They as well be coming out with a set of numbers. What do we look out for there?
Yeah, for Godrej Consumers, Nigel, so last year, around the same time, we were talking that they are insulated from the worries that the domestic market had, and they're definitely insulated from the worries that the Middle East and North Africa region had as well. But now, while we're seeing recovery in the domestic rural market and recovery in the Middle East, North Africa markets as well, Godrej Consumer does not stand to benefit from that, because 50% of the revenues come from India, and the other 50 come from markets like Indonesia as well as Africa, which is not the Middle East, North African region. So that way, they will not see that sort of recovery recovery. However, if you take a look at the numbers, 7% revenue growth is something we're expecting. 10% EBITDA growth. Margins might be improving by about 60-70 basis points, 23.5% thereabouts. And the net profit as a result of that expected to grow about 11.5%. The most important thing that we watch for is the domestic branded volume growth. That is seen anywhere between 6 to 8%. So that should be something that the street would like. In India, watch out for the soap business. We're expecting 12 to 15% growth there. Hair colors business, that is something that we'll be watching out for. 10 to 12% growth seen there as well. Household insecticides, that's been a bit of a pain point for the company for the last few quarters. And out there, some people are expecting a decline, but the street by and large is expecting 4 to 5% growth out there. Indonesia, there are a lot of competitive pressures out there. So sequential growth is something I'll be watching out for along with margins. And the African business, there was a lot of disruption because there were 2 back-to-back presidential elections in Kenya. So that disrupted supply out there and the business out there. So Africa might be a bit of an underperformer. Indonesia, sequential revenue is important. For the Indian business, 6 to 8% volume growth is what we're expecting.
Okay, all right, Mangalam. Thanks very much for that. Moving on, ABB India will also be reporting its numbers. Anisha is back with us to tell us what she's expecting. Anisha.
Yeah, thank you, Ekta, for that. To begin with, the expectations are a bit high, and especially how Siemens reacted after numbers. It looks like the street would not take an uninspiring number as far as that is concerned. So let's look at the number that we're expecting. So revenue is expected to go up by around 13%. We're looking at a margin expansion of around 60 basis points to come in at 8.2%. Remember, last year the margins base was a bit low, and that's why we're expecting this margin increase as well. The profit, however, is expected to go up by around 30%. Now, as far as the top line is concerned, it will be driven by the HVDC order that the company had bagged. The execution is going as expected, and that is why we are looking at that top line growth. As far as bottom line is concerned, we are seeing some higher other income trickle into the company's performance, and that's why we are seeing the 30% growth as far as profit is concerned. However, the key important thing to watch out for this quarter is the order inflow number. Now, we've already got a sense when ABB Global reported its numbers. They said that in Q1, the Indian base orders were up around 18%. They also said that the large orders in India are progressing well. So that is something the street will really watch out for. If there's any disappointment coming in on the order inflow front, that would not be taken well by the street. Back to you.